Hello guys and welcome to Marley Traders. This is Marley and from the Marley crew. Here's a quick update on today's market. So today wasn't really a good day to trade the index market. Even ICT was talking about it. Uh, we've been expecting. Let's start with the dollar here. The DXY, the dollar index. So the dollar. We've been expecting the dollar to come into this range. Actually, probably trade up here, but we've been bearish, so it's not surprising that this happened. However, we expected or we were thinking that it's going to at least come here to feed this gap. So this is an old daily level. If you take it to the daily time frame, so it became a rejection spot. It's been rejecting from here. It becomes a breaker block. So an old level, and if you retest it again, it becomes like a bearish breaker technically. So it's been repelling price from this level multiple times. So how do you trade such situation in a situation like this? So basically, you just do the opposite of what this one is doing for the US dollar pairs if you're trading FX. However, for the indices, this is yes, and let's go to the high time frame levels, extra zones. Okay, turn this gap indicator on. So in as much as we didn't take much trade today, and because the market was really wonky, if you look at the divergences here, SMT divergence, you can see it was really all over the place. Nothing was, it was just wonky, totally weird. However, just like I said, ICT also pointed out in his live stream today, market recap or something, I saw him putting out these levels. So we didn't take this trade because in as much as we knew this was a rejection point, and we also saw these SMT divergences, we didn't take the trade because it was not respecting certain rules that we set for to be able to take a trade. However, that doesn't mean that there were not other trades. For example, this is why we focus on levels taking in our mentorship, and to build a better and solid foundation, you need to know what you're doing. So here we have a lot of pairs that we trade. So we don't trade only ES, we trade a couple of things. If we don't find setup here, we go somewhere else. So this is an example of one of those places. If you look here, we have our higher time frame levels, the daily and the weekly and the 4-hour time frame. So the way we mark it is just the same as what happened here on the ES, the dollar, sorry, the old daily low, this is actually old daily low now, becomes a resistance, it becomes a bearish breaker. The same thing happened here. So this is an old daily low for for UK oil. It becomes a support. In addition to that, in our extra zones, if you take this off, or actually let's leave both of them on so you can see, oh shit, sorry, so you can see clearly. So these are the levels that we work with. Basically, this is all we work with. This is, or rather, this is how we start. So we have this. So how did we play this out? Now, so this is today, right? This was yesterday. It did this. This is what it did. Whatever you want to make of it. So it triggered in here. Take out this old low and this old daily low. As you can see, ODL, old daily low, acted as a support to prepare price to the upside. So you can see this move. Imagine catching this, huh? So let's go to the 15 minutes time frame. The 15 minutes time frame is usually where we start building our entry. We use it for analysis, but our entry is always based on between the 1 minute to the 5 minutes time frame. So right away from here, right from the back, you can see, okay, so what happened when price comes here, and then you take out this. So now the sell liquidity has been taken. So what do you do next? You are expecting price to at least gravitate to this place, and ultimately here. Because gold generally is bullish. So your bias and your narrative and everything is kind of bullish, right? So on the daily time frame, you can see we're kind of bullish here. We did drop a lot, but right now we're sort of changing that. So in as much as we see kind of bearish, but the short term frame, 10, within this range, I say, okay, we are slightly working our way back up, and the market has been really weird lately. So now let's go back to the 15 minutes time frame and see what we'll see. All right. So again, as I was saying, this came like this. So what did you do? Market structure shift right here, right? This is just a basic thing, when you start sorry. When you start analyzing price and you know exactly what you're looking for, what you're looking for, where you're looking for it, and why it should appear at that particular place. Okay, so we have a internal market structure shift right there to the upside. This taken out. So you wait, you trade into this spot. So where does it trade to? Take this right there. So the consequent encroachment of this wick right there, you trade right in there, and that is an entry for you if you know what you're looking for, like I said. But did we enter there? Nah, not really. But that is just one thing, one way of entering. So right here up the back, you can see we have a breaker, a bullish breaker right here. So we have a low, a high, a low, a low. So the high in between is your bullish breaker. So it would be, sorry, not this down close candle. It will be the highest up close candle right there. That is where you get your, in there. Okay, so this was the breaker. That is how we took it. Stop loss somewhere here or here if you like. So this was a good trade. So this is one of our entry model, and we have a fair value gap somewhere here. I think if you go to the 5 minutes time frame, let's see what we can say. So if you have a fair value gap in that range, that would be a unicorn entry. It's like that's a really cool stuff. So somewhere here you can also find a breaker. I just don't have the energy to go all the way to the lower time frame to show you what you possibly can see right there. So that's it. I just wanted to show you ways where you can catch multiple trades and things to look for. So when one door closes, another door opens. Just look around, and here you will find tons of tradable pairs or tradable markets. And if you use, for example, use something like this that we have, you can easily see exactly how this played out, right? So like I've always said, if you're bullish, you buy around the midnight open. So you could have bought from here, from this day. This is the midnight, and this is the midnight open. This is not New York time. So if you put it on, because we live in Europe, sometimes we use the London time. So where's it? New York. So here. So when bullish, if your bias is bullish, you just buy around this place and then off you go. It took out previous day high, which was here, and then where did it retrace back to? It used it as a support to prepare price. Yes, like I said, we didn't take this trade, but it was there. It's just staring at you. It was really wonky, and we didn't take it, but yeah, it's there. So if you know what you're looking at, things becomes really easy for you. That's it for today, or rather that is it for this evening, and have a good evening, and bye bye. See you tomorrow. Oh, by the way, please share, like, and subscribe to this channel. Come to our Discord. We'll show you exactly what we do, how we do it, when we do it, why we do it, right? Okay, we break down ICT's concept in bite-sized pieces and in baby language, so you can understand, and for your entertainment purpose, your knowledge. Okay, bye.